Good morning, everyone, and thank you for joining us for a Tax Practitioners Board webinar. My name's Julie Shaw, and I'm joining you today from Ngunnawal and Ngambri country. We respectfully acknowledge the traditional owners and custodians of country throughout Australia and their connections to land, waters, and community. We pay our respect to them, their cultures, and elders past, present, and emerging. Now, just to begin today's session, I have a quick housekeeping messages for you. First of all, if you would like to access the slides today, you can do that by visiting our Webinars Resources Hub, and you'll find that at tpb.gov.au/webinar-hub, and you can see the link there on the screen as well. We'll also email you a copy of the slides following today's webinar, and we'll do that via the email address that you used to register for the session today. And second of all, today's webinar does count towards your CPE or continuing professional education, and you can claim 1 hour for attending today. And just in relation to claiming your CPE, we will issue an attendance certificate to those of you that are staying online for the webinar today. So let's have a look now at what we'll be covering. So in today's webinar, we're going to look at what is client engagement. We'll look at what is best practice. We'll also have a chat about engagement letters and client verification processes, or POI as you may know it. And then we'll also answer some of the questions that we get throughout the webinar today. So make sure you submit your questions if you have any, and you can do that via the chat box, which you'll find located on the top right of your screen there. And in regard to answering questions today, we have Daniel online with us from our Policy and Legislations team, and he'll be answering any of your questions as we go. So now I'd just like to introduce you to our speaker for today. We have TPB board member Deborah Anderson, and Deborah is a registered tax practitioner, and she has extensive experience as a BAS and a tax agent, so she's a great resource for us. And so Deborah, I just want to say thanks for joining, and I'll hand over to you so you can get things kicked off.
Good morning, everybody, and thank you, Julie. I always love doing the webinars for the TPB, so thank you very much. And a massive welcome to all the practitioners who are online today. I hope you are warm. It is freezing here in Sydney today, 15 degrees. I know it's a busy time of year, so thank you. I really appreciate you taking time out of your schedules to spend the morning with us, so thank you. Today we're going to be talking about all the things you should be considering when you are bringing on a new client. It's that time of year, we're coming up to tax time, so lots of interesting conversation today about client engagement.
Excellent. Thanks, Deborah. Let's dive straight in. And would you be able to start us off by telling us a bit about what exactly is client engagement?
Yeah, so if I put it simply, client engagement is the ongoing cultivation of a relationship between you and your client. So that initial period when you engage a new client, bring them on board, it's a really important time because it sets the tone for the remainder of your working relationship. And if it's done right, can really improve your profitability and relationship with your client.
Excellent. Thank you for that. So when it comes to client engagement, Deborah, what does best practice actually mean to you and also to the TPB?
Right. Julie, best practice is all about providing your clients with the highest quality representation and advice by complying with your obligations and staying up to date. So think about how that fits in with the Code of Professional Conduct, or the code for short, and engaging clients. So best practice means communicating clearly with your clients regarding the terms of their engagement with you. It means determining your client's expectations and having a clear understanding with them about the scope of advice or assistance that you will be providing, and importantly not providing, and also acting fairly and with integrity.
Thank you. That's really good to know. And can you also tell us why it's important for tax and BAS agents?
Sure. Tax practitioners, and when I say tax practitioners, I'm obviously talking about BAS agents and tax agents. So tax practitioners are integral in assisting Australians and their businesses to receive support and advice when it comes to managing tax affairs. The Australian community has high levels of trust in its practitioners. In fact, in our last biannual survey, we found that 89% of consumers said that they have a high level of trust in their tax practitioner. So you can see practitioners play a really critical role in influencing and supporting the integrity of the tax system. And so it's really important for them to lead by example and to build trust with their clients.
Thanks, Deborah. That is really important to know, and I think that's great. The result there from the biannual survey, really good to see that 89% of consumers are having a high level of trust with their practitioner. Could you also give us some examples now of what it actually looks like in practice?
Of course. So what we see as good practice are those agents that exercise sound judgment in applying their professional knowledge and skills. So they look at all the relevant factors in relation to the term of their engagements, the complexity of the transactions, their client circumstances, their client's level of knowledge, their level of knowledge, and any pre-existing relationships that they may have with the client. It's really important that agents keep up to date with their skills and knowledge, and good practice, best practice also means building and enhancing upon your primary qualifications. So it's imperative that your knowledge and your skills adapt and improve as the law, as society changes, and also the changes within your practice and the changing needs of your clients. We know practitioners operate in an environment of rapidly changing technology, which if used correctly can assist them to be more efficient and more effective. So as client demands continue to evolve, one area that is also evolving is the digital experience for users. So clients' expectations have changed. Clients expect interactions to be fast, easy, digital, and really importantly, secure. And there are many software solutions that can assist practitioners to achieve this.
Thanks, Deborah. That was some good points to consider there, and obviously, it's a vital part of the day-to-day operations of a successful tax practitioner. So let's say that we do have a tax or BAS agent who's a little bit new, or maybe they're especially busy and they haven't thought about best practice in a little while. Where should they get started? What can they do to check if they're operating according to best practice?
A great starting point, and I may be biased, but a great starting point is our website, the tpb.gov.au website. We have an extraordinary amount of information on our website that can help you. It's a really good starting point. While some of our guidance is best practice, a lot of it is also a legal requirement. So, again, it's a good place to start. And best practice guidance is normally covered off in our practice notes if you look up those on our website. We also run webinars each month that provide a lot of helpful information. We try and keep it topical, and they're also, as an added bonus, an excellent source of free CPE. I also recommend you go, if you're a member of a recognised professional association, they are an incredible resource as well, and they can offer some really practical guidance. And also, don't forget your peers. Your peers will also be able to help you. Talk to them, network with them, ask them what they're doing and what they are finding works well and not so well. So, that can help you, particularly if you're a new agent in the space.
Thanks, Deborah. That's a good range of resources, and I do agree that the website is an absolutely fantastic resource for people as well. Now, you did mention earlier about engagement letters, so I think it would be a good time now to change gears and discuss what engagement letters are and why they are so important. second. But just before we do that, I think it would be interesting to find out how many of our practitioners in the audience are currently using engagement letters. So we might just run a quick poll here, and we're just going to launch that poll for you. That should pop up on your screen in a second. It's just a multiple choice question. So what we're asking you to do here is just choose from the list. So the question that we've got is, are you currently using engagement letters? And there's 3 options for you. So first of all is yes, I use them for all my clients. Yes, but I only use them for some of my clients. No, I don't use engagement letters for any of my clients. So I'm just going to give you a little bit of time to put through your response there, and then we'll come back and we'll share the results with everyone in a second. Okay, I'll just keep that open just for a few more seconds just to give you a chance to put through your responses. It's a pretty easy one to start us off with today. Okay, let's close that one down, and we're going to share the results on the screen. So Deborah, I will hand back to you and you can take us through the results and let us know what your thoughts are on that.
Thank you. Really, really pleased to see 55% of agents online, online are using engagement letters for all of their clients, and we've got 34% that say they use them for some of their clients. And I hope after today's webinar we might convince you to use them for all your clients. And for the almost 11% that say they don't use engagement letters, I think you're going to get a lot out of today's webinar. So thanks for coming.
Thanks, Deborah. So on that note, how about we actually move on to what an engagement letter is?
Yeah. So the engagement letter is the starting point in the ongoing communication and relationship between you and your client. So they're really important because they clarify your responsibilities and also the responsibilities of your client, so they can avoid future disputes over the scope of work and fees. We at the TPB think that engagement letters are really important for all accountants and bookkeepers. They're a simple way to set out what your practices are, what your expectations are. You can outline your fee structures, and importantly, what you expect from your client to help you do the best job for them. So engagement letters assist in avoiding uncertainties, misunderstandings, especially about fees and about the scope of work that you're going to complete.
Fantastic. Thanks, Deborah. So I think you've touched on a few things here for why they are critical to the engagement process, but could you give us just a little bit more detail on that?
Sure. So engagement letters, as I said, are a simple way of setting out your business practices so you can assure your clients that you are registered and that you will comply with the requirements of the TASA, including the Code of Professional Conduct. And as I said, to avoid uncertainty, misunderstandings, again, especially about fees and about scope of work, and I'll touch on that again maybe a bit later, but engagement letters are also a really useful tool to help you maintain an efficient, effective and ethical practice, which is, incredibly important. You can use them to set out the terms, your terms and conditions, and also the scope of the professional services that you are offering to clients. And, you can also show the other services that you can offer clients in them. So, it has a multitude of purposes. Engagement letters should also inform your clients about their rights and their obligations to you and the tax system, and are a useful reference point, for down the track if there are any questions around any of those aspects. One of the things that we find at the TPB is that in most cases where we get a complaint, it's generally because there was no engagement letter. So if there is an engagement letter, we can often assist by saying, okay, what does your engagement letter say? And engagement letters can save you a lot of time and heartache in the future should your client ever have a complaint. And in most cases, if there is a letter of engagement, it can be resolved really quickly and painlessly. Importantly, engagement letters do not need to be complex. So if you are dealing with simple tax affairs and simple clients, they don't need to be complex. However, even for simple dealings, an engagement letter will ensure that you and your client have really clear expectations, that there are no misunderstandings about the services being provided, how much it's going to cost, or when you'll be paid. So, you know, the simple tax affairs, you don't make much money out of it, so you don't want to be spending time on disputes. So engagement letters are arguably, you know, just as important there.
Yeah, that's a good point. Thanks, Deborah. I think you made it pretty clear there that they are a useful tool for practitioners to help protect themselves in their practice. But I guess a question we do get a lot is, are they actually a legal requirement? Do practitioners have to have an engagement letter in place?
The short answer is no. They're not a legal requirement, although we highly recommend that you use engagement letters. There is no specific requirement in the Code of Professional Conduct or in the TASA, so therefore there is no law requirement for an engagement letter. But as I said, our view is that engagement letters are really important and they're an effective tool that can assist practitioners to meet the requirements of the Code of Professional Conduct more generally, and can also ensure that practitioners and their clients have that shared understanding of what is expected from each other and from the engagement. And even though it's not law, it's important to note that if you are a member of a recognised professional association, some of those may require that you issue engagement letters as a membership requirement. So make sure you check with your professional association. And there are some other legal and professional standards and regulatory requirements that that determine where an engagement letter might be necessary. So, for example, the Accounting Professional and Ethical Standards Board, I think it's APES 305, Terms of Engagement, and also the Auditing and Assurance Standards Board. So I'll note here, given the nature and implication of engagement letters, tax practitioners should seriously consider obtaining legal advice about a letter of engagement that they provide to their clients, but their associations have, in many cases, already done that. So speak to them.
Thanks, Deborah. That's good advice. I think the professional associations can offer some good help there as well. I just wanted to move on now to talk about when is the best time to send out an engagement letter, and should this be a one-off exercise as well, or should we be doing this on a regular basis?
Good question. Look, the obvious time to send out an engagement letter is when you engage a new client. However, it's also important that existing clients understand the ongoing terms of an engagement. As we know, things are constantly changing in tax and in life. So whenever there is a change, whether that be in your terms and conditions or law in a client's circumstances, that is also an ideal time to reissue an engagement letter. Again, that helps to avoid any misunderstandings between you and your clients. And if I talk about best practice, even if no updates to terms are made, even if there are no changes to the client, we still recommend that best practice is a tax agent sending out an annual engagement letter to their clients, and that reinforces the terms with their client, but it also strengthens the legal basis of that document. So to answer your question, sending engagement letters shouldn't be a one-off exercise, And I really want to stress that it's important that practitioners reassess their engagement letters regularly. I mean, things are changing, technology is changing. We talk about in our confidentiality webinars about, the disclosure to use third-party providers. Your providers are constantly changing. So therefore, we definitely do not recommend a set and forget engagement letter process in your business. So again, things that might change just off the cuff, your terms and conditions might change, the scope of your services might change. And again, engagement letters can be used for a multitude of reasons. So you may have expanded your scope of services, or you may have contracted your scope of services. So that's a way of communicating that to clients. Laws and regulations change all the time, as we know. Your fees are changing all the time, or should be changing all the time. Business structure changes. If there's a business structure change for yourself, if you've gone from either a sole trader to a company or a trust, for example, that needs to be a new engagement letter. Or if your clients changed their circumstances. So things like if they've incorporated their business, if they've gone into business from being an employee, or if they're purchasing rental properties. Again, that covers your scope, it covers your fees, and it gives your clients some clarity and certainty about what you're doing or not doing.
Wonderful. Thank you so much for that, Deborah. Could you also give us a few tips on what elements should be included in an engagement letter?
Yes. There's no limit to what can be in an engagement letter. But as I said, they don't have to be complex, especially if you're dealing with simple affairs. At a minimum, what they should have or should include are what it is that is going to be done, who will do it. So whether you will do it, whether you're outsourcing, whether, a junior will do it, whoever, right? How it will be done, when it will be done, where it will be done, and where can be, onshore, offshore, all of those types of things should be communicated in there. How much the work will cost, and that could be, a schedule of fees. So important information about the fees are how much it is, if you know, or how it will be calculated, the frequency of the billing, and a time frame for payment. All of those things can be included. It's also really important to include the tax practitioner's name and registration number. So that's the practitioner that you are billing. So, if you're a company, company's practitioner name and registration number, and that way the client has certainty that the practitioner is registered with the TPB and can also look it up if they need to. You can also include your registered tax practitioner symbol if you'd like to put that on your engagement letters, and that's downloadable from our website, by the way, but I'm not going into that today. You can also put how you will manage their client, your client's information, how you will maintain their confidentiality, and if and how and where their information will be disclosed to third parties. And I strongly suggest you listen to one of our confidentiality webinars if you're interested in more of that. Can also cover things like how you will store their documents. Will you make copies of them? Won't you make copies of them? How long will you keep them for? And we also recommend that it includes things like that you will provide services in a competent manner within agreed timeframes, within the law. What documents you'll be lodging with the ATO. You can communicate your professional indemnity insurance, I should say, what arrangements you have in place for that. How you will deal with tax refunds. So some agents receive tax refunds on behalf of their client. others don't. So that should be articulated, particularly if you are going to do it, and also, you know, how you will account to your client for that. Should also have, or should also inform your clients about their rights, their obligations, and that could be things like providing information to you in a complete and timely manner. And you can use that opportunity to give them a time frame, tell them when the deadlines are, for example, your deadlines, so that you can meet their deadlines with the tax office. Any consequences of errors and admissions. So if they don't give you all the information or are not forthcoming, what are the consequences of that to them, and what can they do if they want you to do something in addition to the scope that has been agreed upon, and what if they want you to go to do additional services, how can they do that? What is the process you'd like them to follow? And also their rights and obligations under tax laws. So, you know, they have rights to appeal, blah, blah, blah. All of those types of things can be put into your engagement letter. So as you can see, there is a lot that can be included in an engagement letter, and even that list is relevant for really simple engagements. So, you know, you can put quite a lot in there. So just wanted to stress again here that it is really important to reassess your engagement letters regularly. Just because you looked at them 12 months ago, the world changes really quickly. You change, your practice changes, your clients' needs change. So again, you know, it's not a set and forget. So look at them regularly.
Definitely. That is a lot to consider, Deborah. So I just wanted to ask, do tax practitioners need to include all of that information every time they send out an engagement letter? And if so, could you tell us why you think that's important?
Yeah, so as I said, we highly recommend that they do include it, but there is no legal requirement from a TPB perspective to issue an engagement letter. That is a business decision for the practitioner, and also might be subject to other requirements based on their professional memberships. Practitioners, tax agents, BAS agents are professionals and really should use their professional judgment in considering matters that are addressed in their letters of engagement. Consider your practice and also the engagement with each particular client. So every practice is different, every client is different. So in terms of the question as to should you include all of that information, I guess I want to reiterate that engagement letters are the starting point in the engagement between you and your client. It does set out the expectation both of the tax practitioner and the client. And when you are setting this up, particularly at the beginning, it's a really good point to set that benchmark of how the relationship is going to go forward and how you're going to deal with each other. So, and as I touched on earlier as well, the majority of complaints we see would be really easily resolved if there'd been a letter of engagement in place.
Okay, thanks, Deborah. Could you tell us, are there any TPB resources that we can share to help practitioners get started with their letter of engagement?
Sure. Look, we don't provide, or we're not able to provide a template or an example of an engagement for tax practitioners. However, we do know that many of the recognised professional associations, that was a mouthful, do have templates. So if you are a member, go ahead and, you know, check those out. I do know they are available to non-members with some associations as well. So feel free to, you know, Google that as a resource. We do, however, have lots of resources to help practitioners. tpb.gov.au is a fabulous resource. We do have a specific practice note about engagement letters and what we suggest you should include in that. So, you know, please take a look at that. We also do publish other bits and pieces. Follow us on Facebook, Twitter, LinkedIn, and each month we host webinars like this. So they're free to attend, free CPE, that, you know, anybody can do. So do that. We do cover all of these issues quite regularly. We also have our YouTube channel. So if you do miss a webinar, or you're just interested in, you know, listening to one that you go, oh, I didn't realise they talk about this, go and have a look at it. Watch it whenever you want, and you can still claim it as CPE. And, of course, we also have a monthly newsletter called e-news. So if you go to our website, you can subscribe to that if you haven't already, and I strongly recommend you do, because we also email every month about these webinars, what's coming up, what's new in the tax practitioner space, and, you know, what other media we are doing as well that you can, you know, tap into.
Thank you. That's some good resourcing there, Deborah. And I thought that was a really interesting point that you raised about accessing the Recognised Professional Association templates, even if you're not a member. Not sure if people are aware of that, but I didn't know that. So that's a really good thing to know. I just want to move on now and just look at legislation. And I guess in terms of the legislation, is there anything that we should be aware of when using technology to help keep compliant with client engagement?
Yeah, look, technology or cloud computing, you know, specifically for agents, can be used for a range of purposes. So things like whether it just be information storage, lodgement of returns, digital signatures, a massive one, client portals, and of course your practice management software. So from a legislative perspective, when you are entering into any of these arrangements with a cloud-based provider, you do need to be mindful of your obligations under the Code of Professional Conduct, and in particular Code Item 6, which states that a tax practitioner must not disclose any information relating to a client's affairs to a third party without the client's permission, unless there is a legal duty to do so. So what that means in real terms is that you as a practitioner must obtain permission from each of your clients prior to divulging any of their information to a third party. And a third party includes a cloud service provider. So one way you can do that, or, you know, one way you can get your client's permission can be in the form of a signed letter of engagement. It could be a signed consent form or another communication type. So, you know, an engagement letter is, again, another really good way of communicating that. As I said earlier, your systems change quite regularly. New systems come in, you know, so, and you also expand your app network. So, you know, your letter of engagement will be consistently changing if you are including that in there. So that's why you need to be continuously updating that. We do have webinars, or we have had webinars specifically about cloud computing and the confidentiality aspect of it. So please do go back to our YouTube channel. I don't want to bore you with saying that too many times, but I mean it. There is so much there. And also to keep in mind when you're using technology that it's really important to be aware of the threat of cyber attacks and cybersecurity in general. Practitioners need to be proactive in protecting themselves, their practice, and importantly, protecting clients as well. So we have released some guidance in relation to cybersecurity and ways that practitioners can protect themselves. And one way that we have discussed and recommended is that you look at additional insurances that will help to cover in or assist in the case of a cyber attack with first-party losses, because cyber attacks can be absolutely devastating. not just for your clients who have had their information stolen, but for your business. They can shut you down. And, you know, some businesses just don't survive a cyber attack. So it's really important to be looking at that. We recognise it so much so that we have made cyber security awareness training a specifically recognised type of training, and we strongly encourage it for all practitioners, and that will contribute to you meeting your continuing professional development requirements with us. So, as I said, it's not that we just recognise it, we strongly encourage it. I was at an ATO meeting yesterday listening to the statistics about cyber and the hacks that are being attempted on the ATO on a daily basis. And I think Jeremy Hershon came out and said not long ago there were 3 million attempts per month, the ATO. Now, remembering as the ATO keeps tightening their systems, agents will become the next target, because agent systems will be less secure maybe than the ATO. So, you know, just remember it's not a matter of if but when, and you hold such a range of rich information. So, yeah.
Very important to consider. I think, Deborah, as you say, the risk of cyber is increasing all the time, and I think just getting harder and harder as well. So keeping on top of that is very, very important. In the board's view, Deborah, as well, what is best practice for tax practitioners who are looking to mitigate scope creep and debtors in their practice? Is there a role that the engagement letter can play here as well?
Yeah, look, scope creep is a massive concern for practitioners, and engagement letters can actually assist you to manage scope creep, because an engagement letter should set out your fees, should set out how it's calculated, and therefore what is included, and as I've mentioned, what is not included. So that will help with the understanding of what is the scope and what isn't the scope. So, you know, scope creep can be, or it can mitigate scope creep by the use of letters of engagement. So,
That is good to know. Thanks, Deborah. Now that we've discussed the importance of engagement letter, I thought it would be a good time to finish up this section of the webinar with a poll. So we're just going to launch our second poll for today. Again, it's just a multiple choice question, and it's based on a scenario that you may encounter as a tax or BAS agent. So once again, it's just going to pop up on your screen, and we just ask you to select the correct response from the list. So I'll just read out the scenario for you. In this scenario, we have Mark. He's a registered tax agent, and he receives a tax refund on behalf of his client, Amanda. The money is deposited directly to Mark's trust account. In past years, Mark has deducted his professional fees from the refund money and then forwarded the balance to his client, Amanda. So Mark has not actually discussed the arrangement with Amanda this financial year, but they have an implied agreement based on their previous dealings. So the question that I have here is, in this situation, do you think Mark should have asked Amanda to sign an engagement letter? And the options we have for you here are fairly simple. So they're yes, no, or unsure. So please just take a moment to answer the question, and once again we'll come back and we'll share the results in just a second. Just give you a little bit more time to put through responses. We've got about 50% of people who have responded so far, so I'll just keep it open a bit more. Okay, we might close that one off. Thanks everyone for putting through your responses there. We'll just share those results, so they should come up on your screen as well so that you can see them. But Deborah, I'll hand back to you now so you can discuss them with everyone. Thanks.
Yeah, thank you, and thank you to everybody that participated in the poll. In this situation, Mark has done the right thing in that he had the money deposited into a trust account, so he kept it separate from his own money. So well done, Mark. However, he does need to account to his client for the basis on which the professional fees are deducted in accordance with the agreement with Amanda, and that, what the remaining balance of that refund is, and giving it back to Amanda in a very timely way. And we recommend within 2 weeks. So what I would say here is that not having a written letter of engagement with Amanda is a risk for Mark, because if Amanda denies that there was if Amanda denies that there was actually an agreement for him to do that, he has nothing to fall back on here. So if she complained to the TPB and we find that there was no agreement in place, Mark may be regarded as having misappropriated client funds. So, that is a risk. Yeah.
Thanks, Deborah. That's interesting to know. How about we move on now to talk about client verification. So the TPB has recently finalised their proof of identity, or POI, guidelines, and they set out the requirements for tax and BAS agents when verifying their client identities. So could you tell us a bit more about the guidance and why it's so important?
Sure. And this is, proof of identity, as we know, with all the cyber crimes and even the non-cyber crimes, is becoming massive. We've had lots of breaches. And I was, again, at this ATO meeting yesterday where John Ford, who I think is a Deputy Commissioner in Fraud, was saying that everybody's identity has been compromised in some way, shape or form, including his and ours. So proof of identity is really important to make sure that who you are dealing with is actually the person you are dealing with. So we have developed along with the ATO, we've developed some proof of identity guidelines, or POI, if you see that, to help practitioners verify their clients' identities and reduce the risk of identity theft and tax fraud on the entire system. So from a best practice perspective, client verification is especially pertinent in cybercrime, as that is just so prevalent in Australia right now and can have really serious financial consequences for victims. And the victims, are the taxpayer or the ordinary person on the street, but it's also for the Commonwealth, which impacts everybody as well. So our new proof of identity guidelines will help you to meet your obligations to secure the personal and financial information for your clients. The guidance outlines appropriate requirements for verification, including defining which documents should be cited, what records you should keep, and recommendations about how to do remote verification of clients, or if you're not in person. Many of you in the audience, I'm sure, have already implemented robust POI systems as part of your practice, your risk management and your governance processes. And our new POI requirements are aimed to make these processes consistent across the different practices, make them more contemporary, streamlined across the profession. So head to our website, tpb.gov.au, to read the full guidance. It is comprehensive. So it says, if you can't get this, go to there. So there's a lot of really good resource in that, particularly as you, if you're just ramping up your POI processes.
Mm. Thanks, Deborah. I'll send a link out to that as well following today's webinar. I also know that the ATO have strengthened their client verification guidelines for tax and BAS agents, Deborah. So are there any differences between our guidelines and that of the ATO?
One of the things we were really conscious of is that we didn't want to have TPB guidelines and ATO guidelines that contradicted each other, and that made a lot more work for practitioners. So we did work really closely with them. They're not identical, but they are similar in most respects. And I say they're not identical because for the ATO, it was about agents that are lodging returns, so clients that are on your client list. But for the TPB perspective, it's actually any client, regardless of whether you're lodging or not lodging. So that's, I guess, the main distinction between them. Otherwise, they're, really similar. So the similarities are about, including the types of documents that should be used should be used, how to deal with situations if a client doesn't have standard identity documents, and also the record keeping behind those identity documents as well. So, as I said, the ATO guidelines are primarily for agents who are using OSPA or online services for agents, but our guidelines apply to all practitioners regardless of whether you lodge or don't lodge, regardless of whether you use OSPA or don't use OSPA. So our guidelines are on tpb.gov.au. ATO's guidelines are on ato.gov.au, but both agencies, because we are separate, both agencies have said if you comply to the ATO, you'll comply to the TPB. If you comply to the TPB's requirements, you'll comply to the ATO. So we are recognising that.
Oh, that's good. Good to know that we're all working together to make things a bit easier for tax practitioners. I also believe that we've got some information on our website that explains the differences as well if people have any questions, so you can go there and have a look at that. Now, Deborah, we have talked about the minimum POI requirements for individuals and non-individuals. Can you talk about that from the TPB's perspective, please?
Sure. So the minimum POI requirements for an individual is that you need to verify the individual's full name and either their residential address or their date of birth. So if an individual is using a representative, and, when I say representative here, it might be, a husband and wife, for example, and they say, just deal with my wife, she looks after all the financial stuff. You also then would need to verify both the client and their representative's full name, both of their residential addresses and both of their dates of birth. And there needs to be an authority in place for the representative to engage you on behalf of your client. So, yeah, that's pretty straightforward, I think.
Yeah. No, that's great. Thanks, Deborah. And what about if you're not an individual client, then what do we need to do?
Okay, so for non-individual clients, so here we're talking about partnerships, trusts, companies, they will have an individual representative because they're not actually a thing. So the individual representative, again, we will need full name and either the residential address or the date of birth. But then for the non-individual, we need the ABN or ACN and other details that can help you reasonably assess the legitimacy of that entity. So that could be, for example, the certificate of incorporation, something like that. And again, we need an authority from the non-individual client to engage with the individual representative, which is really standard procedure.
Thank you. Could you also tell us what evidence a tax agent or tax or VAS agent should cite to validate the client's identity?
Sure. Great question. So for individual clients and their representatives, we require one primary photographic ID. So that could be things like a photo driver's licence, an Australian or foreign passport, or a government proof of age card. If there's no photo ID, you can use a primary non-photographic ID and a secondary ID. So a primary non-photographic ID could be something like a birth certificate, Australian or foreign. It could be a citizenship certificate, a pensioner card, or a healthcare card. A secondary ID can be something like a Medicare card, a rates notice, but it needs to be no older than 3 months, or another notice issued by a government agency in the past 12 months. So when you are citing the documents, particularly the photo ID, make sure that the ID looks like the person or the representative that you're dealing with. That's really important. It's funny how many people forget to do that little basic check, and also check the name, address, date of birth, check the spelling, because often the fraudsters just do something really little. And if in doubt, so if you are doing a proof of identification and you're not 100% sure, ask for another piece of ID. Blame it on us, say, the TPB requires we do this, and just always make sure you're 100% sure. So our guidance is really comprehensive. The team have done a great job on this. So if you do want more detail, there's some great lists on our website, tpb.gov.au, and it goes through both the individuals and the non-individuals, and it goes through all of the alternatives as well if people don't have the traditional type of identification. And before I finish on that one, please do not keep identification documentation for your clients, and I will touch on it. We're going to talk about it a bit later, but I'm just going to say it again right now. Don't keep copies of ID documentation.
Very, very important. Thank you, Deborah. Yes. I just wanted to also talk about remote technologies. We all know that they're becoming increasingly common. So can a tax practitioner confirm a client's identity via electronic or remote verification, or do they have to do it in person?
No, absolutely you can do it electronically. We live in an electronic world. But what we do strongly recommend is do not use email. So for sending sensitive information such as your identification documents, unless you use an encrypted or password protected attachment, or use a portal or something of that nature rather than email. Email is not a secure form of transmission. So yeah, please don't do that. Other ways, as I said, you can use a portal, you can use secure websites, you can use secure online mailboxes, file uploads, secure messaging. There's a whole range of ways you can do it. And if you're not sure, speak to, if you've got an IT person or an IT provider, have a chat to them about what is and isn't secure, or, even your professional association might be able to help you with that as well. If you engage with clients remotely, which I know a lot of people do these days, use a webcam or video conferencing to cite the documents, but make sure that you take a record of what POI checks you did, when you did it, how you did it, and make that you did it via webcam or one of those types of things.
Fantastic. Thanks, Deborah. Let's finish up this section now with a quick poll. So we'll just launch that poll now, and what we are doing this time is we're going to ask you how I've got my tongue tied here. What records should you keep as evidence to show you've undertaken POI checks? So we've got a few different responses there that you can choose from. First of all, we've got date and time that the POI checks were done, the types of identification documents cited, how the documents were cited, who performed the checks, and their position within your practice. We've also got the option to select all of the above, and then the final option there is none. This isn't required. So if you could just take a second to put through your responses, we'll keep that poll open for you, and we'll come back and we'll share the results in just a second. I'll just give you some more time. So the question we've got is, what records should you keep as evidence to show that you've undertaken POI checks? And the options, again, I'll just read those out for you. Date and time the POI checks were done, the type of identification documents cited, how the documents were cited, who performed the checks, and the position of that person within your practice. All of the above or none, this is not required. So it looks like we're getting a few responses coming through there. I'll just keep it open just for a little bit longer. Okay, we might close that one off now, and once again we'll share those results, so hopefully you can see those on your screen, but if not, I will hand to Deborah and she can share them with everybody. So thanks so much for putting through your contributions.
Wow, great response to this poll. Thank you, everybody. And for the 94.3% of people that said all of the above, top of the class to you guys. Well done. It is all of the above are required. So, but do please remember what I said earlier. We don't require or even recommend that you keep copies or originals, which is horrible thought, of any identification documents of clients or their representatives. And as I said, we strongly discourage this practice because we recognise these documents are at risk of being stolen through cyber attacks and even physical break-ins to your business. So, however, we do require you to maintain a record. So the record could be a checklist for your POI checks done, and you need to note things such as the time and date that the proof of ID checks were done, the type of documents that were cited and whether they were original or certified copies. How were they cited? Were you in a personal meeting with the person? Was it webcam? Were they electronically uploaded through a portal, for example? And who performed the checks and their position within your practice? The record should also certify that the identification documents were clear and legible, and the identified client and their representative, and identify the client and their representatives. And, you know, if you can't see the photo, for example, or you can't read it properly, you know, ask for more information, ask for more identification. You know, you can't be too, what's the word, Julie? You can't be too diligent on this particular requirement. So, yeah.
Excellent. Thanks, Deborah. We might finish up there and go to some questions from our audience. So I've got quite a lot that have come through today.
Julie, I did forget something.
Sorry, Deborah?
I'm sorry, I forgot something.
Oh, sure. Go ahead.
I forgot to mention that you need to keep the information about the proof of identification for at least 5 years after the engagement with your client or the non-individual client, you know, representative ceases. So that's a long time. So make sure that you have your processes in place. So all those records, and then make sure you keep a record of all of those things for at least 5 years after the engagement with your client or representative ceases.
Okay.
So, pretty important. Sorry.
Definitely. Glad you clarified that. Thank you for coming back for that one. So let's have a look at some questions. So first of all, could you tell us how often do you expect us to conduct proof of identity for existing clients?
So for an existing client, it really does depend. So if it depends on there's a whole range of things it can depend on. So it can depend on your relationship, how well you know the client. So, for example, one of my clients is my daughter. So therefore, you know, proof of ID for her would be very different to proof of ID for somebody that walked in off the street. Okay, so, you know, remember those types of things. Also, if there is a whole of practice transfer or whole business transfer, you need to consider that. You need to consider the scope of the services that you're providing to the client, the types of interactions. So if you're only dealing with a client online, so whether that be via email, your proof of ID might want to be a little bit more robust and more often than if you were actually meeting the client in person regularly. Also, proof of ID you might want to do at ad hoc points when there are changes. So, for example, if you all of a sudden get something unusual, a client contacts you via email and says, my bank account's changed. And you're like, oh, that's weird. I know their mortgage is with Westpac and everything's with Westpac, but now they're gone to CBA just for this. That's very strange. So, don't be afraid to ask your clients, and they'll be grateful that you have double-checked with them. How often you deal with the client, I think I mentioned that, you sort of touched on that earlier, but just if you're only dealing with the client once a year, if it's just an ITR that, and you've got a big practice, they don't deal with you personally, they're dealing with different people all the time. And we did have a situation of an agent here in Sydney who had been a client they dealt with every year, and one particular year they were same way as always via email. Client said, here's my return information, blah, blah, blah. There were some unusual things in there, but agent didn't suspect anything, had been dealing with this person that they'd never met, didn't know, but did the thing, and it turns out it was fraudulent. The person's email had been compromised. So, if something it's always worth doing it, especially if you don't have a close relationship with that client. Anything that changes, anything that doesn't feel right, any discrepancies that arise, any changes in relationships with the client, changes within their business. If there's a new manager now you're going to be dealing with, remember that then you need to identify and also get another authority to deal with the new person at that company or business. So, or again, if there's been a break in the continuity in the engagement with your client, do another proof of ID. So again, it's, you've got to use your professional judgment about it. You're all intelligent people. So, just, minimum, if, where possible every year. But if something is suspicious, always double check and make sure that you keep notes, a record of your assessment, why you made that assessment. So if you say, look, I've been dealing with this client for 20 years. I meet with them every 3 months. They come in, we have a chat, blah, blah, blah. I didn't ask them for a copy of their POI. Make notes about why, the date, why you made that decision. And that will always assist in case there is a problem.
Thanks, Deborah. I think, it's really important what you're saying about trusting your judgment and, asking questions when things don't look right. I know that we're sort of a little bit over on time here, but I just want to ask you a couple more quick questions. So first of all, could you just tell us, Deborah, does the engagement letter need to be signed by the client?
Who else would sign it? Sorry.
Is it a legal requirement, I guess, for them to sign it, or is a verbal acceptance okay, like an acknowledgement via email or something like that? They're all okay as well, aren't they?
Well, I'm not a lawyer. Sorry, but I would think that there was an implied acceptance if they responded and said, yep, all happy with this, can't get to a scanner or something like that. I'm sure there would be an implied, but it would also show us at the TPB that you had, communicated that. Mm-hmm. So I think that's, it might not be ideal, but yeah, sorry, I'd probably have to ask our policy people on that.
No, that's okay. I think Daniel's put through a response in the questions to that one as well, so we can share that.
He's the guy.
He knows, that's right. Just quickly, one last question, Deborah, before we finish up. Is it acceptable for a tax agent to receive a refund without the client's prior approval?
No.
No, please.
You need to get your client's prior approval. It's their money, not yours. So not only do you have to, if you do get the refund, it has to be in a trust account, but you do need to get their approval beforehand.
Okay, great. Thank you so much. So thank you for everything today, Deborah. It was a really useful presentation. I think everyone would have learnt quite a lot from today. I just wanted to finish up by giving you a bit of information on how to stay in touch. I'd really like to encourage you to follow us on LinkedIn, Facebook and Twitter, and we'll keep you up to date with all the latest information there. As Deborah mentioned in the presentation today, we also have TPB e-news, which is our monthly newsletter you can subscribe to. Also, attending our webinars are a great way to keep up to date. And as she's also mentioned today, you can also watch our YouTube channel. We have a comprehensive library there of all of our webinars. And as Deborah did mention, you can claim CPE for watching those recordings as well. Just to finish up, I do want to say thank you once again to Deborah for providing all that useful information, and thank you to Daniel for assisting with the questions today. If you haven't already registered, we do have another webinar this afternoon, which is around taking a reasonable care under pressure, and you can register for that by going to our website. And finally, I just wanted to launch an exit survey, which will pop up in your browser when you leave the webinar today, and we would really appreciate it if you could take the time to complete it. It's super quick, and it is really helpful for us in terms of looking at future topics that might be of interest to you, and also just improving on the webinars overall. So once again, I just want to say thanks so much for joining us today, and we do hope that you enjoy the rest of your day. Thanks, everyone.